In this video, I'm going to showcase a simple indicator that you can use for highly accurate pullback entries. We're going to go over what this indicator is and how to use it to trade. If you happen to find value in this video, remember to leave a like. Let's get into it. So this indicator is called the FVG Positioning Average, created by LuxAlgo. To add it to your chart, you want to go to TradingView and then load any trading security that you like in any time frame. For me, I'm going to be using the 30-minute time frame of GBP-JPY. After that, you want to click on Indicators and then type in FVG Positioning Average, and it's going to be this one by LuxAlgo. Now, the FVG Positioning Average is a technical analysis tool designed to help traders identify potential price levels of interest by averaging the different initiation points of recent fair value gaps. But what is an initiation point? And more importantly, what is a fair value gap? Well, a fair value gap is a space in price data that happens due to significant buying or selling activity. So like here, there is this sudden jump in price. Just before the huge move, you can see that this candle right here is actually bigger than all these candles. This sudden huge candle indicates a bullish fair value gap. And then the opposite of this would indicate a bearish fair value gap, which is this. We had this huge drop in price, but on the onset of this huge move, we have this candle, which is obviously bigger than all these candles, indicating a bearish fair value gap. Now, an initiation point in the case of a bullish fair value gap would be the origin of the gap. So basically, the way you would label a fair value gap is from the high of the previous candle to the low of the next candle. For example, here, this is our fair value gap. The initiation point is right here, basically the bottom part of a bullish fair value gap. The opposite of this is right here, the origin of a bearish fair value gap. This is a bearish initiation point. So this indicator basically takes the average of these initiation points to calculate and plot out this trend ribbon that we have here. Looking at the settings of this indicator, we can see that for bullish fair value gaps, the initiation points form the bull average. And then for bearish fair value gaps, they form the bear average. And we're going to be using this indicator this way to identify the trend of the market as well as the pullbacks for our entries. Whenever the trend ribbon is colored teal, like here, and the price is constantly trading above it, that would indicate a bullish trend. Conversely, whenever the trend ribbon is colored red, with the price constantly trading under it, that would indicate a bearish trend. Now, if we go back to the settings, we can see that we can change the FVG lookback length. This determines the number of FVGs to consider for calculating the averages, hence the trend of the market. We have the lookback type. This includes the bar count, which uses any FVGs within the given number of candles that you put. And then we have the FVG count. This uses only the number of FVGs that you put. And then here we have the ATR multiplier that can be used to filter out weak FVGs. Having a bigger number, like 2, is going to filter out a lot of FVGs. So smaller numbers less than 1 are recommended. For this video, I'm going to keep it at the default value of 0.25. We also have an option to show or disable the FVGs, as well as showing or disabling the gradient areas. I'm not going to touch any of these options because for our strategy, they work pretty fine. Now, using this indicator to trade needs the addition of one extra indicator for long-term trend identification. That indicator is the moving average exponential, also known as the EMA. You're going to add it to your chart and then access its settings and change the length to 200. I also like it a bit brighter, so I'm going to change the color to yellow. After that, click OK. Next, we're going to go over how we can use these two indicators to take our positions. But before we do that, let's talk about the Forex broker that you can actually use to trade with any strategy. That broker is hankotrade. Now, I've been using hankotrade for quite some time. As you can see here, this is my live account on hankotrade's web trader platform. The reason why I think hankotrade is a great broker is because of their low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of us who love high leverage, well, hankotrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, they're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, well, sign up to hankotrade using the link in the video description. Now, back to the video. So to take a long trade using this strategy, these are the conditions. First, we identify a long-term bullish trend using the 200-period EMA. We need the price to be trading above this moving average to confirm that the price is in a long-term bullish trend. Condition number 2 is to identify that the price is in a short-term bullish trend. For that, we're going to be using the LuxAlgo FVG Positioning Average. We need this trend cloud to be colored teal and the price to be trading above it. This confirms a short-term bullish trend. Now, the last condition is to identify a pullback that's happening within this bullish trend. Now, how do we identify a market pullback? Well, we're going to be using the FVG Positioning Average indicator. We basically need a red bearish average cloud like this to be formed. This indicates that there is a single bearish FVG pattern that's causing the price to pull back down. Now, after we have the pullback, we need a candle to break and close above this red cloud, like this, to confirm the end of the pullback. Because of that, we're going to enter a long position here. The stop loss is going to go under the most recent swing low. For the take profit, well, we're going to target a risk-reward ratio of 1 to 1.5. If we let this trade run, you can actually see that it was profitable. Now, to take a short position, we're going to do the opposite of everything we just did for this long position. So first, we confirm that the price is in a long-term bearish trend using the 200-period EMA. We need the price to be consistently trading under this moving average to confirm the trend. And as you can see, it is doing exactly that. The second condition is we confirm that the price is in a short-term bearish trend. For that, we're going to be using the LuxAlgo FVG Positioning Average indicator. Gosh, that's a mouthful, but we basically need this trend cloud to be colored red and to have the price trading under it. Now, the third condition is we confirm a market pullback. To do that, we want to have a tiny green opposing trend cloud, like this. This indicates that there is a single bullish fair value gap causing the price to pull back up. Once we have it, our last condition is to confirm the end of this pullback, by having a candle breaking and closing under this green cloud, which means we can now take our short position. The stop loss goes right at the most recent swing high. For the take profit, well, we're going to target a risk-reward ratio of 1 to 1.5. If we let this trade run, we can see that it was profitable. Now, this is just one of the methods that we can use this indicator to trade, but there is another way. Now, on my chart, I added this multifunctional price action and smart money concepts indicator. This tool is loaded with tons and tons of price action concepts as well as smart money concepts. But the one feature of this indicator that we want to use in conjunction with our strategy is the breaks of structures, also known as BOS. This is going to increase the win rate of this strategy immensely. So like here, we're going to maintain all the previous entry conditions where we confirm an overall trend using the 200-period EMA. We confirm a short-term trend using the FVG Positioning Indicator. And then we confirm a market pullback by having a red trend cloud within a green cloud. Next, we want to have a candle breaking and closing above this red cloud to confirm the end of the pullback. Those were the previous conditions, right? But now, to incorporate this new tool, let me just go ahead and enable it. And as you can see, this right here is how we do it. We basically need that same candle, the one that closes above the red cloud, to also close above the most recent swing high, basically forming a break of structure. Once we have those conditions, we take a long position. And as you can see, the trade was profitable. Now, to understand this even better, let's take a look at a short position. So here we have a short position with all the previous conditions met. We have a long-term bearish trend because the price was trading under the 200-period EMA. We also have a short-term bearish trend because the price is trading under a red ribbon of the FVG Positioning Indicator. Thirdly, we also have a green cloud within a red trend cloud, indicating a market pullback. And then finally, this candle closed above the green cloud, confirming the end of the pullback. At the same time, the price broke and closed below this swing low, making it a break of structure, as indicated by this indicator. We take a short position here, and as you can see, it was profitable. So these last two conditions basically utilized all our previous entry conditions with one extra confirmation from this last indicator we added. Ladies and gentlemen, this new indicator is the Market Dynamics Pro by Chart Prime. It's a super useful multifunctional indicator that contains features like order blocks, fair value gaps, liquidity zones, higher time frame candles, volume profile, the money flow POC, predictive ranges, premium and discount zones, trend lines, and even chart patterns like triangles, double tops and double bottoms, head and shoulders, etc. It's a private indicator, so if you want to get access to it and try out all these features, well, you want to use this link down in the video description. That's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.